A very clear, broad sell-off. Does that suggest this idea of when tech stocks do pull back, it'll lead to a rotation isn't accurate, and that if things start selling off, everything gets dragged down?
Well, it can be a little bit of both. You can see a rotation in the market. You're certainly seeing that today with a huge spread between 6.5% drop in tech and energy, which is the best performing sector. It's still down 1%, but that's a significant gap. So I think you can have a combination of a pullback, and by virtue of the power of the size of the big names, if they have big sell-offs, they're going to drag the overall index down, given that the top 5 by market cap stocks in the S&P basically make up their own quartile. But it can be in conjunction with a rotation into other more classically cyclical areas. The rub there is I think the economic data will have to stay for the most part on a positive trajectory to justify the rotation into those more classical cyclical. So that's the potential risk if this rotation continues.
I think what makes it scarier on a day like today, Lizanne, is that the slides come so fast and so abruptly. I mean, obviously, the market can't go up every single day forever, and we were in a very long streak of record close after record close after record close. So perhaps we were due, but to get 4 or 5% moves can be a scary thing to look at your portfolio. So what do you tell your clients when they call you and say, what's happening? Should I get out? Is that
scary, but that's the nature of a move like this. When you have such narrowness in the market and such dominance by a small group of names, it's hard to pinpoint the precise time at which we'll see some sort of reversion in whatever form that takes. But as you get more stretched, the likelihood that it happens more swiftly in a condensed period of time increases. And I think there's been an appropriate focus on the risk associated with such a small percentage of companies driving. And then when you add in, not across the spectrum of cohorts in the market, but certainly a tremendous amount of speculative frenzied activity seen in certain pockets of the market, in some of the split stocks, in those high momentum stocks, in just a very small subset in the options market. I think that also adds to the risk that if you get a catalyst or the catalyst is just that the market starts to rotate or sell off, it can pick up speed pretty quickly.
Lizanne, are you telling your clients to buy this dip, or do you think in the short term it's got a few more percent or more to slip?
My bailiwick is not sort of the short-term, very short-term trading. We've been telling investors to maybe be more mindful of more frequent rebalancing, take advantage of moves in both directions, to maybe rebalance based on portfolio moves as opposed to having rebalancing be calendar driven. I'm not sure that just today's weakness is sufficient enough to ease some of those excesses and tell the short-term folks this is the kind of dip you want to buy. I don't have a clearer crystal ball than anybody else, but certainly the excesses suggest something more than just a single-day compression in the high flyers may be necessary to kind of right the ship.
Lizanne, thanks for joining us. We are down 5.3% on the NASDAQ, 4% nearly on the S&P 500.